I go by several principles to govern how and why I invest. This principle, the hotel principle, is an analogy that I use to visualize my entrance and my exit into a position and where I can see the risk reward in doing that. So let's take Snapchat stock for an example. The hotel principle defines itself in 6 floors, from the basement to the 5th floor. So the basement here represents the bottom of the stock, and the 5th floor represents the all-time high. So with Snap as an example, I can use the $18 as their basement and $28 as their 5th floor. So this gives me an increment of $2 per floor. And I use the $18 because that is the lowest they have dropped to and been steady around. And I use $28 because that's been their highest point so far. In this case, my hotel principle shows me that I will want to buy Snap around their basement level at $18 because that is their historically lowest value. Now, Snap is not a very good example for this because we have too small of a sample size of historical prices. It works though because by looking at the hotel, we don't know what's in the foundation, as in we don't know the bottom, and we also don't know if the hotel plans to build more floors, as in we don't know how high Snap can go. What we do know is that $18 is 6 floors lower than $28. I purchased Snapchat at their basement, and I did this because I have a higher chance to take the elevator to a higher floor rather than digging a deeper basement. So Snap does have the potential to go lower, and it also has the potential to go higher. In this case, the small sample size evens out positive and negative outcomes. This is my perspective. Currently, they're trading around $22 right now, and this is the 2nd floor in my hotel principle. In this case, they can move down 2 floors or up 3, so this is a better risk reward. This helps my decision making when I want to exit the position on a quantitative basis. Now, the problem with the hotel principle is that it does not consider any factors other than historical prices or any qualitative data. So high growth stocks that are already at their high show them as a top floor of their hotel. I bought Netflix at their 5th floor, their top floor, and if I used my hotel principle, it would have failed the test. The only reason I actually use the hotel principle is so I can visualize where I have the highest probability of finding profit that isn't based on speculation, rather it's based on historical prices. So the hotel principle is my way of kind of visualizing historical prices, nothing more than that. It's not a sure way of analyzing a stock, but it's how I measure risk reward. And so what I'm getting at is you should find your own principles to govern how you invest. So that was the video. I hope you liked it. Make sure you hit the like button. Also subscribe to get my videos notified to you. This Sunday I'm analyzing a stock, so make sure you look out for that video.